All right, welcome to EmpowerAg Trading live turnaround Tuesday. Thanks for jumping on here. Got a lot to talk about today, this week. It's been a nice week since we last did this last Tuesday. Had a nice little rally in the grains, cattle chopping around here, but we got a lot to talk about. Want to talk about what's happening today, right now. Invite you to join the conversation. Drop us a comment, leave us a question, something like that. We can bring those into the show and you can be a part of the conversation here. So grains continue on the ripper, cattle chopping around, the bears trying to castrate this cattle market. That's my one-line zinger here for you. I like it. Anyway, leave us a comment, like, subscribe, share, and I'm going to roll that intro and we'll dive into the show and bring in our special guest. Thanks for joining us. All right, thanks for joining us here on Tuesday, Turnaround Tuesday. Markets are chopping around. Let's quote them up, and then we'll jump into the show here. So looking at your corn market, we've traded on both sides. We're firmer overnight, but decent corn is down 1/4% at 4.89 and 1/4. The high overnight was 4.93. Beans are up 8 3/4 cents at 12.24 3/4 on your nose soybeans. KC wheat is down 7.5 cents at 7.51 on your SEP contract. July 27 at 7.79 1/4, down 3 cents. Chicago wheat down a nickel at 6.69 1/4 on SEP Chicago wheat. Looking at your feeder cattle market, well, they were up earlier and now a little bit of red on the screen. Looking at September, down 50 points in SEP, 332.45. Fat cattle were weaker on the front and firmer on the back, chopping around these markets, trying to figure out where they're going. Looking over your macro markets, though, we got lots of pressure in your macro markets. The Dow is down 130 points. The S&P is down 43 points. The NASDAQ down 470 points. I believe it was down as much as 500 points at one point, so bouncing off those lows. Energy market, you got crude at $85 a barrel, up $1. Heating oil's been on a tear. Diesel markets are up. A lot of movement on your dollar index and treasury stuff. A lot of macro market stuff going on right now out there in your markets. So with that, appreciate you joining. You got a lot to talk about here today. I'm going to bring in my guest, Connor B. Add him to the stage if I can. Here we go. Clicking the buttons, making things happen. Connor, how are you today?
I'm good. Where are we going to go? Are we going to talk about the past? Are we going to talk about the future? I'll fall. You lead it, and wherever we want to talk about, we're going to go with. Because we got a lot of topics. This we could go anywhere you want.
We could. There's a lot happening, and it's fun to talk about your grain markets right now. Absolutely. So let's start with the past. I like that. Had the WASD last week, sparked the market, right? So continued. Yes. What do you think about last week's price action in the WASD, Connor B?
Yeah, number one, we've had a great. I mean, soybeans up 10. We were up 20 the day before. Soybeans was a semi-bear. I mean, if you just looked at the numbers, it was semi-bearish. I think the overall story is we added corn. We added 2.5 million acres of corn, 2.5 million of soybeans as well, right? Corn and soybean acres jumped up 5 million. They barely touched the yield, didn't touch a whole lot of other numbers. I think ending stocks grew ever so slightly, neutral. Corn, we did a lot of whipsaws, right? We added acres, but then the big one is we dropped yield down to 180, 8 bushels lower than last year. At this time. And so we saw, and then exports jumped up as well. We've got a tight stocks to use right now. I think that's the story is, what was it, Brady? Just over 10% stocks to use. If we get in the 9s, historically, that's a pretty bullish signal. And so right now, going forward, we really can't afford to have any hiccups in yield, in anything like that, or that stocks to use number gets very tight. And so markets reacting accordingly. We've got a nice rally in corn markets. Looks like, we're working our way to go test. We're testing some highs that we put in July and working toward testing the calendar year highs as well on corn and soybeans. So nice rally. Let's see. Is it going to continue? Right.
Is it going to continue? Right. Yeah. As small crops going to get smaller on the corn side, we're going to see a continued trim on that yield. We're going to add some more acres. Where the heck did these acres come? Are they converting parking lots in the cornfields again? Are we flipping them back over?
Everyone told me solar's taking stuff out of farming. These suburbs or subdivisions are growing. I'm not seeing it because here's the thing: is where my head went, where I saw corn and soybeans are up. Oh, okay, they trimmed wheat acres or something like that. No, wheat acres stayed constant. Oh, okay, cotton acres, right? The guys in the Delta planted a lot more. Cotton acres were up. Rice, I think, was constant or up a little bit. And so just from July to August, it's a real head scratcher. And even if you go state by state, I can't make a lot of sense of it. But I will say, if you look at it, don't look at the July numbers. July versus August, it's a head scratcher. Year on year, the changes made a little bit more sense, but still, just up 2.5 million on corn and soybeans. That's unique.
Yeah, I saw some data that CRP acres were actually flat too. So you can rule out the case that we took out CRP acres and converted that into the cropland too. So lots of head scratching though. The cotton one, I'm not a cotton guy. I know enough about cotton to be dangerous. I'm on the northern fringe of the cotton belt here in Kansas, but all spring long, it was talks of, going to see 9 million acres of cotton and reductions in the cotton acreage. And to see the USDA come in and bump those cotton acres up higher and higher each report. So that kind of baffles me, but maybe they're right. I don't know. I'm not like I said, I know enough about cotton to be just dangerous enough. So lots of things happening on the acreage front. So, all right. Crop tour. So WASD provides that initial spark. Have a nice rally late in the week. Black Sea tensions continue to, escalate. We've got geopolitical stuff going on. So a rising tide's lifting all boats. You've got lots of dominoes that are really supporting this market right now. You've got money flowing maybe out of cattle and out of macro markets into commodities and grains. Oil's, $85 a barrel. Heating oil, diesel prices continue to be on a screamer. That supports bean oil. Got to watch bean oil, though. I think bean oil might be down on the day. It is. Okay.
Yep.
Try on bean oil. So I got a graphic I want to bring in here before we get too far ahead of ourselves. This is the ratio. You talk about that 10% stocks to use ratio. That's the red line right there. On the right side of that red line is years where we've seen stocks use above 10% on your corn balance sheet. On the left side is tighter than 10% stocks use. And then as we go up and down on that graphic, that's price. So right now that gold star is right in that 470, 490 range. So that and right at that 10% area. So this highlights what you're talking about there. As we get tighter than 10% stocks to use. Just another way to look at that, how parabolic this market can get when we get into 8, 9, 10% stocks to use ratio. Keep in mind, what was the ending stocks number on that the USDA gave us here? Was it 1.6 for new crop?
So tight. That sounds right.
Right around in there. So yeah, but where I'm going, I guess, is with 90 million acres of corn and a 180 yield. If you trim the yield, each bushel you trim yield going forward, you're taking 90 million off that production number. You can get sub 10 pretty quick if this crop shrinks. And, I don't know, 178, 177, those numbers really tighten the balance sheet in a hurry and get the market excited. So will we see that type of number from the crop tour this week? We got a crop tour happening. What are we finding out? Connor B, you want to talk a little about crop tour stuff?
Yeah. First, you were dead on the money. Ending stocks at 1.6.
Okay.
So you're right. And yeah, so it feels like it's just a 10, unless we raise yield. If something changes, which is USDA can, it feels like we've got a supported market as of right now. Pro farmer crop tour, right? It started. It still catches a lot of attention, and so far they're echoing what we've been hearing. I saw the South Dakota numbers. They were down something like 12% year on year. I think that tracks. I think that's exactly it. The one that surprised me is Ohio. I thought Ohio would maybe be up on the year. They didn't have a great crop last year, and just looking at precipitation and everything, they were down something like 3%. And so I think we're seeing Nebraska. Are we seeing Iowa today?
I think we're Indiana.
Nebraska, Indiana, and then tomorrow will be Iowa, Illinois.
Mm-hmm. Yeah, I think so. Converging, meeting in the middle.
And so right now the story is they're echoing that this isn't a trend line yield crop is what I'm seeing. I mean, there's some good stuff out there, but a lot of variability, a lot of stuff that's maybe looking is late the right term? I don't know.
Yeah.
But yeah, it's going to be interesting to see what that final yield number is. We'll get that Friday.
Yep. So I got a chart and a graphic that I'm going to pop up later here in a second. But first, before it compares Pro Farmer versus USDA, the August WASDE, and then the USDA final. But we'll save that here for a second before we go there. Tyne Morgan, love following Tyne, talking about yesterday and today about how immature the crop is out here in, I believe she's on the eastern leg of the tour in Ohio and Indiana. And I found her comments very interesting because when we look at the USDA crop conditions stats, the USDA doesn't think the crop is far behind where what they're finding out in the field, indicating that there might be some immaturity out there. And I don't know what that means in grand picture of things, Connor P. Is it good pro or good? I mean, late season coolness, does that help better? If the crop's late, is that actually better for grain fill? But some interesting in-field boots on the ground observation there from Tyne.
Yeah. Recently when we talk about Indiana, it's that north of Indianapolis, the amount of rain they got and the flooding is really the story. If you were in that corridor, it was unbelievable how much rain they got. But the whole growing season, Indiana has been, they haven't seen the incredibly hot temps. They've been decently fortunate with precipitation, but one thing I'm hearing is, are we seeing some nitrogen loss with how wet it was that early June, and then the heat we kind of saw in July? Is that influencing the lateness? I'm not sure, but interesting to see. And it's when we get in these states that are supposed to, I can't wait to see what Iowa shows. Iowa is what we've heard is, they're at that 78 to 80% good to excellent. Iowa's got a crop, and that was the narrative. I bought into it a little bit, Brady, is that, hey, if Iowa's got a good corn crop, how if Iowa's great, Illinois is good, Minnesota's a record, we've got a crop. That's going to be enough to be okay. It's going to be interesting to see how good is Iowa, right? They were part of that they have got more than enough rain this past week. And so it's going to be interesting to see what Pro Farmer shows. I'm paying attention to Pro Farmer this year much more than I did last year.
Yeah. Well, anytime we've talked about the East versus West, and how bad is the bad, how good is the good, and what's the average in between. If you have bad in the West, you really need the East to even things out. Otherwise, bad on bad is ultra bad, right? So we need it's nice to see the boots on the ground, what they're learning out there, and follow along with the crop tour and with the price action that we've seen in the USDA report. It really fuels the fire, I guess, of, okay, how tight are we? We've got some tightness out there in that in the stocks to use ratio. It wouldn't surprise me to see the Pro Farmer tour come in and be 2-3 bushels below the USDA number that we saw last week, and that maybe provides some fireworks here. So I got that graphic. I'm going to pull it in now. This looks at the Pro Farmer tour results historically versus the USDA final corn yield. So lots of variability there. The red bars are when the Pro Farmer Tour was under the USDA final yield. The green bars when they're above. Trends, I guess, that I'd pick up from here, Connor B. A lot of times Pro Farmer has been, over the last 20 years, below the USDA final corn yield. But when you average them out, I went back and crunched some of the numbers here. The last, just looking at the USDA versus final, the last 5 years, on average, 2.5 bushels below the USDA final yield. So average, good track record there. Looking good. Yeah. Interesting to look at and compare, though, Connor B.
It is. Well, the first thing I wonder is my immediate thought as I go to 2010, and my first thought was, were they all drunk when they were checking fields that time? Or did they all just phone that one in? But what the true answer is how much that crop changed from August to the final yield number, right? Probably adverse fall conditions is what happened there. And so, that's what I see, even looking at 21, when they were above USDA, I feel like it was still decently accurate. It was just that this crop either fell off or didn't have a good finish. We didn't see the kernel fill. consistently, is it fair to say consistently that pro farmer is a little bit under the USDA compared to the final, right? That's the consistency, and that's what I would look for. If they come in with a 177, 178, okay, that tracks. That feels USDA is close to 180. I think if we get in, what number do you want to use? If we get down to 176, 175, is that where it's like, that would probably, I think that would get people questioning how good this crop is, and is it going to continue? Is the USDA going to continue trimming yield going into January?
Right. Yep. Definitely sets the tone for we saw the cut this last month, August WASDE. Will we see another one in September?
Mm-hmm.
How tight does it get? So versus the August WASDE report, the last 5 years, Pro Farmer Tour had 1 year where they came in above. The last 10 years, also 1 year where they came above the August WASDE. So
what do you know what year it was? Don't tell me. I want to guess.
You want to guess? I can pull it. I'll look at it. Yeah.
It was was it like 19 or 21?
It was 21. Yeah, 21 year.
Okay.
Nailed it.
So yeah, so consistently they're going to be a little bit we're trade and we're looking for a pro farmer number that's going to be under the USDA.
Yeah, yeah. I got you. You don't get the wrong buzzer. I got my. No, you don't get that. No, you get the champion buzzer for nailing that year right there, Connor B.
We've talked about the rally, but I guess just to put it in perspective, we're looking at no soybeans. The high Brady was 1250, 1253 was the high close. Right now, we're right around 1224. The high was 1231. So we're getting, back in that high position. December corn, easy math is just a little bit above 5 was the calendar year high. In that mid-July rally, we're basically right back there, 488, 489. And so we're not too far off from, making new highs. And so I guess my question is where's the actionable level? We're I think a lot of reasons to be bullish as of today. A lot of reasons, and if we start looking to the future, we got to see what Brazil crop looks like. We got to see what demand. If China's, we had another flash sale on soybeans. We see them completely honoring that 25 million metric ton of soybean purchases. We are well on our way to China honoring that. If China comes in and buys U.S. corn or something like, if we start building this case, suddenly things feel pretty friendly going forward. And so I think risk management and producer is, where are we hedging this crop and how are we
right. So how do we, that's a great thought to think about. So we're not in new territory for either beans or corn, right? I mean, we've been here already this year at one point. Yes. Now we're, we have a little better idea of our production in some areas. My area, we've got less production. Your area, maybe you're more certain and feeling good about, okay, I've got these extra bushels. I could imagine that there's been a little more farmer rewarding the rally if you're in the heart of the corn belt, the I states, comfortable with your production. Where in my area, you're probably a little more hesitant because you might have rewarded it early on, and now it's, do I really have the bushels? Where's my production? I'd like to see one more rain, and then I'll do something. But to your point, also, things have gotten tighter. Things are getting a little exciting. So do I reward this rally? Do I stay bulled up? Managing risk, and it goes back to a lot of what we talk about all the time is just flexibility, right, Connor B?
Absolutely. I think, in my opinion, to answer your question, it still comes down to if we're cash flowing or if we have to move stuff this fall. If we're getting near previous highs, I think that's if again, great point. If you're in an area where we have a crop, we're going to be at around APH or hopefully better. I think we're getting very close to actionable levels. If we start talking bin bushels, we can afford to be a little bit more patient and see how this market shakes out. I think that's perfectly okay to say. A target. Here's a round number target, which I know we should never do in our business, but
Mark, do it though, Connor B. You're going to be married to this number, right?
This is just for to get the ideas flowing. March corn high, previous high was The close was about 417 or 517.
Okay.
And so right now we're sitting at 505. If we get into that north of 510, 512, 515 to where we can hedge March futures 515 and then come in and protect that sale, minimum price contract. Let's buy calls or call spread for 15 to 20 cents. We're hedging $5 corn with some upside through March. If you're a guy that's undersold and you want to, that number works for your operation, $5 corn, and you're, especially if you're in a good basis environment where maybe that hedge is closer to 510, 520 post-harvest. To me, that's actionable. That's where I'm having the conversation, I think.
I love that strategy. I love it.
Simple.
I love it.
So you're telling me there's a chance?
I hope so.
I think so too. I hope so. I want to see it. So we talk about corn, and I think we talk about bin bushels and fall harvest delivered bushels. You got to look at the spreads too, right? So
yeah,
D's corn 488, 489, 504. Got nice 15, 16 cent carry to the March. The March makes great sense to go out there if you're storing bushels in the bin. Just go out there and hedge the March. The May though, giving you a little bit. What are we? 8 cents spread on the 8 to 9 cents carry on the May. So.
It's tight. It's tighter. Yeah. What do you think? In your opinion, is 15, 16 cents? Is that enough? Are you if you have December HTAs, are you rolling to March or putting hedges in the March?
I think it comes down to looking at your overage and some of those logistics, what you think, your crop size looks like. And if I have more bushels, I'm probably more aggressive with getting those hedges out there in the March. A lot of times though, farmer's probably undersold and he probably just needs to go sell some more versus roll hedges. So where are you actually placing those hedges? Where are you selling? A lot of guys like to go, that 5 handle. It's there in the March. It's there in the May. It's there in the July. But at 515 versus 512, July versus May, is it really worth going and selling 515 July for 3-4 cents? Not to me. Not to me.
It doesn't feel like it. And it's one of those where, okay, the yields drop, demand's fantastic. Why do we have a 16 cent carry, right? Could that certainly tighten up? I think so. I'm a bird in the hand guy when it comes to spreads for producers. Okay. Commercial is probably going to wait. Maybe they've got they're going to roll hedges at 18 cents. We're sitting at 16 cents today. If we're looking at placing new hedges, I'm placing them in the March, unless it's a situation like you talked about, right? If we're moving them in December, put the hedges in December. That's fine. But that spread is still wide because we got to remember we still got a lot of old crop, right? We had record production last year. Production this year is second. It's still it's still got a 16 handle in front of it. We still have the old crop. This rally is a little bit because exports are so great. And so I think that's what you're seeing when you start looking at the March to May, going out to July, that spread tightening, because then I think we're getting into a little bit more demand scenario and different things. So yes, I echo what you're saying, right? I'm not placing hedges in the May right now. But there's a real setup if we're using bin bushels. I think you got to be, I don't know what the next 60 days, 90 days is going to bring, but looking at really moving some stuff, JFN, I think.
Yeah. Yep. Watching those basis levels too. Those are always also another leg and important piece of it all. So a lot of things to think about. I love that discussion though, talking about where should you place hedges. I think, sometimes we get so hung up on a raw number, 497 or 504, and okay, what month is it in? What month are we hedging? And what makes sense mathematically for our logistics of it all on the farm. So good stuff, Connor B.
Yeah.
All right. Well, school's about ready to start, right? I mean, first day of school here for my kiddos.
Same for me.
Same for you?
Yeah. Okay. We sent 2 kindergartners today.
That's exciting time of year. Kind of bittersweet, I guess, for me, because each year they get a little bit older, and I know they're not going to be the same the next summer. So every summer is a little different. But I don't know. Sometimes you're excited to get them back into a routine, out of the house too, though.
Yeah,
a lot of stuff happening.
We got to form the routine because it's their first time going to school, and so it's been a hectic few days. I'll tell you that. But they're at school. I haven't gotten any calls to come get them, so I think it's going good so far.
That's good. Yeah. Hopefully they have a good first day. Hopefully everybody out there, your kids have a great first day of school as we get things going back. And I I guess we'll see what the rest of the week holds with the Pro Farmer Tour, see how the market reacts. If you guys have questions, you want to talk about stuff, hit us up, Connor B, agmarket.net, Brady Huck, EmpowerAg Trading. You can head on over to my website. Every Friday, I pump out the weekend wrap, insider market update video, send you something, clients, customers, prospects only, but invite you to go check that out. Connor B, thanks for jumping in today. And yeah, we'll see you next week, maybe, right?
Go. I hope we continue. It's a bull market is a lot of fun. I hope it continues and we can keep having these discussions.
For sure. For sure. All right. See you, Connor B. Have a good rest of your day. Thanks for joining us today. Like, subscribe to the video, share this with a friend. We'll catch you next time. See you.